Let's talk about S corporation and self-employment taxes. What do you need to know? Okay, so here's the approach I want you to pay attention to. So basically, most sole proprietors form an LLC when they want personal liability protection or to keep their personal assets and their credit profiles separated from their actions of the business, right? Pretty straightforward. Then they can choose to be taxed as an S corporation for the tax benefits. And it's also a popular designation for a business with several owners or partners who want to avoid the double taxation that happens with the C corporation taxation, okay? With the C corporation designation, rather. So basically, when we talk about S corporation and self-employment tax, we first need to determine eligibility for an S corporation. So are you eligible? Here are some of the basic S corporation requirements. And so there can be no more than 100 shareholders. There can be no more than one type of stock. Preferred or tiered stocks are not allowed. So you're gonna have common stock. And so when we talk about S corporation, by the way, an S corporation is a federal construct, is a federal tax construct. So it is a construct that doesn't happen at the state level. So you don't have an S corporation at the state level. And also another criterion that you need to really think about is that shareholders must be U.S. legal residents or citizens. The S corporation cannot be owned by another LLC, C Corp, or a partnership. And the nature of the business activity must meet certain criteria. Some financial institutions, domestic, international sales corporations, and insurance companies are not eligible, okay? So if you're thinking about S corporation and self-employment tax, you cannot be those categories that I just listed. Now let's talk about sole proprietorship versus S corporation. So it's important to understand that moving from a sole proprietorship to an LLC and from an LLC to an S corporation tax status gives you the benefit of legal and asset protection, right? Beyond that, some entrepreneurs like the tax benefits of an S corporation too. So specifically, S corporations can pay out a portion of the owner's income as salary. Why is this important? Well, the salary is taxed as employment income, which is subject to FICA payroll taxes, 15.3% of your gross wages. And what happens here is that your S corporations pay half of that amount, 7.65, as employer taxes, and gets to write them off as a business expense. You pay the other half, 7.65%, and these taxes are withheld from your paycheck along with your income tax. So this is pretty good. And if 15.3 sounds familiar, it's because the self-employment tax you pay as a sole proprietor is 15.3% of your taxable earnings. So what's the tax benefits of an S corporation? Well, the S corporation advantage is that you only pay FICA payroll tax on your employment wages. The remaining profits from your S corporation are not subject to a self-employment tax or FICA payroll taxes. So this is kind of cool. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. I want to dig a little further by talking about more S corporation and self-employment tax consideration. So before you actually jump on board with the S corporation, there are a few more things to know about. So first of all, while the self-employment tax savings is significant, it's just one part of the taxes you'll be paying. So it's one of those things you have to have a clear idea about the number of taxes and the amount of taxes that your specific S corporation might have to pay in the quarter or in the year. You still have to pay income taxes on the salary and profits that you earn. So depending on where you live, this can vary. Don't forget to add payroll taxes or self-employment taxes you will owe in either an S corporation or sole proprietorship arrangement to the income taxes you will owe, both federal and state. And based on our research, we have also seen that some taxpayers fail to include this in their calculations, and it's a big number to pay attention to. Another crucial factor is what the IRS calls a reasonable salary. So that's $50,000. It can be $50,000 all the way to all the way to $75,000, depending upon the industry you're in. So if we're taking the example of, let's say you are an accountant, or not an accountant, you are a business manager or a marketing manager, and folks in your industry are paying $50,000 to $60,000, then you also want to tie your salary around that interval, okay? And so there is no one-size-fits-all guidance for calculating your S corporation salary, and you have to determine what is reasonable for your situation. The IRS wants to be sure this perk is not exploited by underpaying your salary and claiming most of your income as S corporation profits. If your reported salary seems too low, especially compared to your profits, the IRS may flag you. So researching similar job positions and their salaries could prove beneficial here. And now, do S corporations get 1099 forms? No, because S corps don't pay corporate taxes the same way as C corp do. So instead, the profits pass through to the owner's tax return, and then the owner pays income tax of the profits. Each year, the S corporation must file a corporate tax return called 1120S. So Form 1120S. So the S corporation filing deadline is March 15th, and like your individual return, a 6-month extension can be applied for, not a problem. Boss, I want to quickly remind you of today's topic. We are having a conversation about S corporation and self-employment tax. Now let's talk about how do you become an S corporation. So when we talk about S corporation and self-employment tax, it's important to know the route that you need to take to become an S corporation in the first place. Okay, so if you are sold on the idea of an S corporation, there are a few things you'll need to do in order to start. If you are a sole proprietor, you will need to become an LLC first. Then you will need to file Form 2553 with the IRS to request the S corporation tax designation. So the S corporation election deadlines is basically 75 days after you wish the S corporation status to take effect. Although, do not be scared if you want this benefit to be retroactive. The IRS is flexible with late elections. You also need an employer identification number and EIN to fill out the forms for taxation, payroll taxes, and corporate records. And so if you are already an LLC, you can still request S corporation status by completing Form 2553. That's not a problem at all. And you will need to submit the form as soon as possible. And it can be submitted with the tax return of the first tax year you want S corporation status to be effective. So since forming an LLC is done at the state level and the S corporation designation is done with the IRS, many business owners find it easier to let someone do this for them, right? So you can actually just reach out to an accountant or to a CPA firm or to other players to kind of help you out, okay? And remember that S corporations do require some record keeping, but it's nothing like what a C corp might deal with. You would also avoid a double taxation, one of the major drawbacks to the C corp lifestyle. And you also need to pay quarterly taxes for your employees, even if they are shareholders. And remember to actually give out W-2s to employees as well. Okay. Profits and losses to shareholders are reported on Schedule K1, so they can include this on their personal income tax payments as well. That's really good. So there could definitely be some perks to the S corp lifestyle. So you want to start by forming an LLC for your business, then file Form 2553 with the IRS for S corp tax status. And if you really find the process time consuming or confusing, there is help for business owners like you. So it's one of those things where you want to reach out again to a CPA, you can reach out to an EA, or you can reach out to a tax attorney to kind of help you out. Okay, so you have a clear idea how to do your S corporation taxation, but also self-employment tax structure. So you can outsource the paperwork to a professional, and so you can focus on keeping on with your business. Let me give you a few steps here. I want to talk to you about how to run payroll for S corporation, because when we talk about S corporation and self-employment tax, we need to necessarily talk about payroll taxes. And I want to really give you a few ideas here. It's important to really set up employer accounts. So you want to make sure that you start out by setting up the appropriate employer accounts. So it's one of those things where you have like a federal employer identification number. So we're speaking about, technically you're not legally required to have an EIN as an S corp, but you'll need one if you want to open a bank account in your business's name, apply for local or regional permits, or establish credits in your business name. So you can apply for an EIN in person, by mail, or online. Then you also, when we talk about set up employer accounts, you also need to think about state tax ID. So this is actually the state level version of your federal employee identification number and employer identification number. It's a unique number used to file state taxes for your S corporation. You will need a state tax ID if your business will be required to pay state taxes. So you want to research your state's laws concerning income and employment taxes to determine whether you need this ID or not. And then you have to think about unemployment insurance. So even if you are a single owner S corporation employee, you need to pay federal unemployment insurance for yourself. The benefit here is that in the case of a disaster, you can apply for unemployment against the payroll and unemployment insurance you pay on your own behalf. Or you also need to think about electronic federal tax payment systems, the EFTPS. You got to have an account so you can use this tax payment service to pay taxes due to the IRS. Since as an S corporation owner, you'll be paying payroll taxes on at least a monthly basis. It will be beneficial to sign up for this free service. And you also have workers' compensation. Not every S corporation owner will need to pay workers' compensation insurance. Laws establishing who must carry work comp insurance vary from state to state. And so you also need to think about new hire reporting account. You'll need to register a new hire reporting account with your state. All private, public, government, and not-for-profit employers are required to do so. And so the law does not exempt any business from reporting new hires. So if you plan to have any employees working for your S corporation, you'll need to use this type of account to report on those hires. Boss, I want to quickly remind you of today's topic. We are having a conversation about S corporation and self-employment tax. So the very first thing is to actually set up employer accounts. Next, you need to determine a reasonable salary. So when we talk about S corporation, that's what I said to you earlier. You have the whole concept of reasonable salary. So when you are operating as an S corporation, you will receive a salary from the corporation. This means you will be required to determine a reasonable salary for the job duties you are performing for your S corporation. You can easily determine an appropriate salary for yourself based on the IRS factors relating to S corporation salaries. So the questions are, does your position require training? How much time and effort is required for this position? How much experience is typically required for this or similar positions? What are the going salaries for this or similar positions? And does this position receive any non-salary bonus payments? So if you answer yes to these questions, you should be able to avoid overpaying or underpaying yourself, both of which have consequences for you as the owner. So when you underpay yourself, you can get into audit trouble, especially if you actually selected to pay yourself $0 annually. On the flip side, if you overpay yourself, you'll end up paying more than you need in self-employment taxes, okay? And so it's one of those things, again, you have to really think about what really is appropriate for your situation. And so the third thing is you want to calculate payroll taxes. So once you have set your reasonable salary, you will use this figure to determine the following taxes: FICA taxes, income taxes, state and federal, unemployment taxes. S corporations do not have a specific tax rate because all of your S corporation's income is pass-through income that comes through on the owner's your personal tax return. Your tax rates will be subject to all taxes based on your tax brackets and filing status. Okay, so you will file your payroll taxes using Form 941 for income and FICA taxes and the portion of payroll taxes your S corporation paid in that period. And Form 1040-ES will report your estimated taxes on income that is not subject to withholding. So it's one of those things where we are telling all our clients and viewers for that matter, to prepare to pay their payroll taxes on a quarterly basis. The best way to avoid missing payroll tax deadlines or accidentally miscalculating your tax amounts is to actually partner with a payroll provider who can help you. The next thing you want to do here is to record payroll transactions. And this is really important. So you want to run payroll for an S corporation in a way that you are able to maintain accurate and detailed records for all payroll transactions. It can be easy to get passive with your record keeping, especially if you are a single owner S corporation, simply using your corporation to pay yourself. Okay. However, getting lax on your record keeping will certainly come back to bite you in the event of a tax audit, which you do not want to have. And when we talk about tax audits, we're speaking about at the federal level from the IRS, but also from state tax authorities. So to record your payroll transactions effectively, you want to split your transactions into 3 categories: wages, payroll taxes, and shareholder distributions. So when we talk about wages, the regular salary you pay yourself and any employees you have working for your S corporation, and this is where you can also include income tax in this section. So everything about wages will really encompass all salaries that you paid. You also have payroll taxes. So here we're speaking about any taxes you pay on Social Security, Medicare, and unemployment. So for Social Security and Medicare, you are looking at 15.3%, right? And then you also have shareholder distributions. So shareholder distributions, those are any dividends you receive from your S corporation. They are taxed at the shareholder level as opposed to being included with your regular wages. So again, this is a difference, or if you will, a segregation of data here. That's pretty good for you anyway. So this is really important. So when I talk about the running payroll for S corporation and paying self-employment tax, you have to set up employer account. You need to calculate payroll taxes. You have to there are a lot of ways to sort of go about it, but you need to calculate payroll taxes. But don't forget that you need to also determine a reasonable salary. What really because everything revolves around having a reasonable salary, because the payroll taxes are based on the salary that you actually are paying yourself. So, and record your payroll transactions, okay? And then the last thing you need to do is file state and federal taxes. So let's talk about that. So when we talk about filing states and federal taxes, it's important to really understand that you have a lot of forms to really familiarize yourself with. You have quarterly tax forms, and then you have annual tax forms. I mean, luckily you don't have like monthly tax forms. That'll be too much. But quarterly and annually, you have some tax forms to actually familiarize yourself with. So you have 941. So here so I want to first talk to you about the quarterly tax forms. So you have 941, you have state unemployment, and then you have state income. So when we talk about 941, here you are reporting income taxes, Social Security, and Medicare. And any business that pays the wages needs to file this quarterly form unless you are basically approved to file a form 944 and 944 annually instead. Then you have state unemployment, so also known as a SUTA. You'll be required to file your state unemployment tax payments every quarter. Then you also have state income. So this form is used to file your state income tax. So your S corporation will be required to file this form every quarter. What about annual tax forms? So Form 1040 actually allows you to report your annual federal unemployment tax, FUTA, and every business head with employees, including self-employed S Corp owners, must file this form every single year. And you also have Form 944. This enables you to file taxes for your Social Security, Medicare, and federal income tax only once per year instead of quarterly. So this is actually designed only for the smallest employers whose liability for this taxes is $1,000 or less. You also have a Form W-2. Here you have wage and tax statements that reports an employee's total income and taxes withheld from wages. You also have Form W-3. So here you have a transmittal of wage and tax statements that summarizes an employee's W-2 for the Social Security Administration. Then you have Form 1120S, U.S. income tax return of an S corporation. So this form reports the business's income, gains, losses, deductions, and tax credits. Then you have Schedule K1, Form 1120S. So shareholders' share of incomes, deductions, credits. So this form represents actually an individual shareholder's income, deductions, and tax credits. So this is really cool. Thank you so much for your attention. I really appreciate it. Let's quickly do a recap of today's conversation. So I was talking to you about S corporation and self-employment tax. So let's do a recap here. I gave you the approach. I give you the steps, and now I'm just wrapping things up. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.